All right, guys. Good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. It is Friday, January 20th, 2023. It is OPEX day, options expiry day. So again, nothing new. We've gone through this before. Just elevated volatility doesn't really give a sense of direction when it comes to OPEX. Doesn't have necessarily mean bearish day or bullish day. It just means elevated volatility as traders are closing up positions. Let's go ahead and get started around the horn. Dow futures down 31 points. Nasdaq up 0.5% on Netflix beating earnings expectations with subscribers. But their EPS was a miss. But that was enough to boost the stock up about $40. No, excuse me, $30 this morning. Well, after hours yesterday and this morning. Google announced some layoffs as well. That boosted the stock. It's out at 96.40. Masterclass has the 95 calls for this week. So we held that. Let's see if we can get that off our books today in the morning since it expires. So we can just catch it. It was red for most of the week. S&P 500 futures up 0.15%. We held that 3,900 support. We posted a chart on Instagram regarding that support. That was the breakout point that we used on that retest back in the 9th, and that we played calls to the upside. So again, as long as we hold 3,900, you could see that the wedge is getting tighter and tighter. So something's got to give, exactly how I explained it. Let me see if I can bring up a 4-hour chart, be a little easier. And you could see that, again, the most popular trend line in the world right now is that S&P 500 trend line down. We rejected it, obviously, but we do have higher lows at the bottom end. So 3,900 is holding, but again, you could see that we do have this ascending wedge that we're getting. So one way or another, we're going to get some kind of move as we tighten in the range. So either we're going to break down or we're going to break out. Especially with OPEX, that remains to be seen. So again, really what I'm looking for around 38.85 as support. If that breaks down, then you got to take a look at the 3,800 level for the next level of support that we were trading before. So really, you're kind of stuck in this range. Nasdaq is helping. Remember, tech is a larger part of the S&P 500 more than value. Value stocks are a little down today. The staples have been down, underperforming after having a great year last year. But as interest rates do fall, we do see value names don't get as much steam just because of the flatness of growth. So again, when rates go higher, that's when the staples do well, the defensives. When rates go lower, that helps the growth names, the high beta names to borrow money. Again, we talked about high yield credit, the credit markets. That's what it's meant. That's what it's supposed to indicate. Russell 2000 flat, 1845. Crude oil up 0.5%, 81.08 barrel. Gasoline futures $2.62 a gallon, up 1%. Gold futures continue to rise, 1926. Kind of hard to trade that unless you're doing futures. I hate GLD. I refuse to trade GLD anymore. 2403, up 0.67%. Same thing with SLV, drives me bananas. I can't do it. The volume is terrible, and you really need to catch it in order to even get us even a marginal gain. Copper futures up down about 0.5%, $4.21. Euro dollar is down 18 pips, 108.12. Dollar yen is up 209 pips, 130.52. So remember, we talked about that Japanese yen correlation with yields. You can see the yields are up too, 33.448. We talked about mortgage rates on Instagram. If you want to check out that post, of anyone who's interested in refinancing, there's some info. It's not a sales post or anything. It's just letting you know how interest rates work and how interest rates are falling. We're not realtors or anything like that. So just giving you just the information is all. 102.46 on the dollar. You can see still kind of basing right around 102. Nothing has really changed there. Still some weakness there. I expect by the end of the first half of 2023, which may be a little too conservative, that we'll break 100. So I'm still watching that. Volatility index, again, we did hit that support that we talked about and we bounced off it. Let's take a look at the daily. You could see that support right around 1934. I talked about that on the newsletter. We bounced off that. So again, volatility index is not exactly screaming fear, but it is bouncing a bit. Let's see what else. Bitcoin futures flat, 21,117. 170, excuse me. 1559 for Ethereum futures. So kind of all quiet on the Western front after we got the pullback yesterday from that trend line. You could see it here. Again, we got to around 40.32, and then we got to the low of 39.01, and we ended up around 39.25 or so. But again, still holding there. If we're looking at the daily chart on S&P 500 futures, really the next level of support is that 20-day moving average. That's our momentum indicator, at least in terms of the daily. If we can stay above that, I think that we should be able to hold that 3,900 support and use that as a bounce point. But again, with OPEX, it just complicates things moving forward. So we just have to, keep an eye on everything else moving forward. My eye is on the dollar. The actual dollar S&P 500 kind of parallels of the move, the correlation. Again, didn't really work yesterday. The dollar was down yesterday, and the stock market was down. So again, it could be just run a kind of a sell ahead of OPEX, sell ahead of the meat of the earnings that we're going to get next week. And then I'll post the earnings that are coming up for next week as well. But really, what has changed the past week? Nothing, just more jawboning from the Fed. Now we're about to get into a Fed blackout period where there's no more speakers until the 1st. And then we actually have stock buybacks starting up next week as well. So keep an eye at that support for a possible jump point as a possible pivot. But it could break today, but we're just going to keep an eye on it. I'm not looking to put tons of risk on. I have only one trade for next week. Boeing and JPM did not work for us this week. We did hit QQQ this week. What was the other trade that we got? We also got Qs this week. A pretty, not the best week, kind of choppy with the market. We caught Apple this week, and we caught Qs this week. JPM and BA did not work this week, so basically 2 for 2. Maybe we catch Apple today, but it's for next week. Thankfully, I bought some time because Fed killed all the premium on the contracts for this week. So I'm glad I bought some for next week. I got the 140 calls for next week. So again, we were looking to break out of here. You can see on the daily, we're still above the 20 MA, which is better than the S&P 500, which is good, a lot more higher. And then we're really just targeting that 50-day moving average by next week. I think we get it, especially if the dollar can reject a bit. The Google headlines about their tech layoffs are boosting the Google stock. Netflix had subscriber beat, but EPS missed. They also talked about FX currency headwinds. Again, that's going to be a little better for the future, help forecasting because of the dollar. And lower rates, again, if we stay at this kind of pace, should help these companies at least have liquidity to further operations without having to dilute shareholders by offering more stock. If you guys remember GME, AMC, they just keep offering stock, diluting your shares in order to raise capital. I'd rather them go to the bond market, at least where there's some liquidity left, then they can fund their buybacks. Netflix is doing their buybacks. So again, Netflix, in terms of the bigger picture, in terms of tech, Netflix isn't exactly the strongest company out there. But again, to me, it's always been that first tech company, that first barometer of how the stock market's going to go. And with that being said, I think Netflix having that increase in subscribers should help, at least in the services sector for Apple, maybe the gaming sector for Microsoft, and so on and so forth, depending on what their subscriber model is and what brings the most in terms of revenue. Another one that would be a good beneficiary of the Netflix move, really not much today, at least pre-market, is really Disney. And Disney is getting close to that $100 level. 101.03 breaks out of that downward trend line on the daily. If we do break out of that, I'm taking a look here at the 103.86 level, which is the 200 MA. You could probably do the 104 calls, maybe the 103 calls, depending on volume. But again, Netflix, Google, Meta, and Disney are all in that same communication services sector. So again, we saw how Google did well with the Netflix earnings. We saw how Netflix did with their earnings. Let's see if we can kind of get that momentum into earnings season, since the bar is relatively low in comparison to last quarters. Good call. Let's see. Good morning, Carlos. What makes you think, what caused JPM to tank? It was pretty much rotation. And the reason that rotation happened is because rates came down. As rates came down, it makes value names like banks and industrials that pay dividends, solid dividends every month. Coca-Cola, same. We're under weakness. Again, they're not going to be as viable in a lower rate environment as they would last year in a higher rate environment. only because, again, stocks, again, doesn't mean JPM is a bad company. No, it just means that the demand for that kind of stock is not there today or that there this week. We figured that we could just ride that bank momentum higher, but rates came down, made value get rotated out. And what do I mean by that? Let's go and take a look at the relative performance for the week. And you could see it here. Industrials, utilities, defensives, financials, all down because of rates are going lower, TNX. What was working this week? Communication services up 1.9%, technology down 0.72, but outperforming, and then energy down 0.11%, pretty flat. Pretty much the only one out of all of the actual value names that actually did pretty well. Oil has been relatively volatile, at least in a short time frame. So that's really the only reason. It just lost interest, lost demand on the stock. Doesn't mean the stock is bad. JPM is fine. Banks are fine. I think Goldman Sachs is fine, even though their earnings weren't the best. But I think they're going to get out of that consumer area in terms of lending and kind of focus on what their bread and butter is, which is deal making, investment banking, trading, fixed income. That's where I kind of want to see more of them. When they went to Apple Card and started doing more consumer stuff, I think that just added more risks for them that they didn't need in their portfolio. I didn't hear anything from the CEO saying they're getting away from it, but they're adding more reserve loan loss. So the banks are kind of pricing in a recession out there, but yet copper is pricing in a boom. Rates are pricing in a recession too, but gold is also pricing in a recession, but yields are coming down as if there's liquidity out there. Gasoline is showing that it's a recession too, kind of a demand as well. But the volatility index, the VIX, is showing that all clear in a sense, like, hey, there's not much fear out there. So it's kind of a wonky environment right now. I don't think it's investable either. Unless you're DCAing, dollar cost averaging, it's really not investable because you really don't have much clarity, at least on the Fed side and at least on earnings. We only got a handful of earnings that came in yet. It's okay to wait. Let's see how the earnings come through. I want to see how Amazon does. I want to see how Microsoft does in terms of cloud and enterprise. I want to see Apple when it comes to consumer technology. I want to see UNH when it comes to health. Coca-Cola for value. Costco is increasing their buybacks. So again, we're going to see a little more opportunities in terms of the companies that are offering buybacks because they want to go ahead and actually prop up their stock with their money. And again, that's always a good sign when a company is buying back shares. Not all the time, IBM and Meta withstanding, but again, it does show at least a good symbol of, hey, this company believes in their stock as well. In terms of the market as well, I'll go over the rest of the day and the week itself on the website, on the newsletter. Let me go ahead and show you the website. It's gar.capital. So you just go here to member portal. You're going to scroll down. And then you subscribe to your newsletter. You just type in your name. We don't sell you anything. We're not gonna spam you. It's just the newsletter and any kind of promos that we have. So anything changes with us, you will definitely be the first to know. So again, if you are interested in the actual newsletter, here it is. Just enter your email and we'll get that out to you. So I'm gonna go and type that up today, if not early tomorrow. So I wish I had more news for you guys, but again, kind of quiet, all quiet on the Western front after yesterday's move, rejection of the trend line. We do have OPEX today. Earnings will be coming next week. Let's take a look at Forex Factory in terms of upcoming economic data. We have flash services PMI on Tuesday. We have advanced GDP quarter over quarter. That's on Thursday, and we have core PCE on Friday. That's the Fed's look in terms of inflation. That's what their barometer is. So in terms of where the market is and where the market is going, I mean, I think we're kind of in a little bit of a crossroads. But if we expand this a little bit more, and we can go ahead and go to the 3-year weekly, again, from the bottom of COVID to the top of the all-time highs, we're still above the low, obviously the low being the 50% retracement. We're still now kind of knocking in between the 786 and the 618. And again, that 3,900 being that key level. If that does break this kind of wedge here, then we could start seeing some weakness, possibly 3682 floor, which is your 200 MA. And then we'll see where we go from there. But until then, it's just more prudent to wait. There's no need to go all crazy as of yet. So we'll go and leave it there, guys. Thank you, Javier, for the question. Have a great rest of your weekend, guys. I'll get you guys the newsletter. Investment Club, I'm working on all the videos and stuff. I had to pause my SPY-G investment, at least for the month of January, just kind of get tax prep for the year. I got meetings this weekend with the team, going over a couple things. So again, you got to prep early. Everyone knows that. Got to prep early, especially as a business. It's not as simple as just turbo taxing it. It's a little more than that. So always fun. Sometimes the business of business gets in the way of business. I heard that once before, and it really stuck out to me. Have a great weekend, guys. Go Cowboys. I hope they win. If you care about my picks, Kansas City, I think, wins that game, the first one against the Jags. And then you also have Eagles and Giants. I hope the Giants win, but I think the Eagles take care of business. Bengals and Bills, give me the Bills, and Cowboys, give me the Cowboys, at least to cover the spread. I think it's a 3-point game. If I was putting money into it, I bet on Tampa Bay last week, only as a hedge on my emotions because I wanted to lose so bad, and I wanted the Cowboys to win. And it didn't matter. But I think the Cowboys at least cover the 3. So it might be a field goal game, and then my kicker misses it. Of course it happens. That's just the way it is. So there you go. Yeah, 49ers. 49ers are a great team. I have zero expectations of my team. I just hope they just play their ass off and win. But 49ers are probably a Super Bowl champion team, if anything. Let's see what Brock Purdy does. Go Micah. Go hit Brock Purdy. Dak, show me something. Have a great rest of your morning. I will see you guys on Monday, either very sad or very, very excited. So I'll see you then. Cheers, guys.